ESG, doing good for environment, social impact, and governance. The question is, why do we need such frameworks? Do we really need to be told to do good for society? The truth is that we as humans like to mess things up, right? We like to mess up the environment. We like to shy away from our social responsibilities. And when it comes to having impact in terms of governance, we're not always there. So frameworks like these are kind of a reminder to us to actually do some good in this world. It was known as CSR many years ago, but it evolved into ESG with much more stringent requirements. But is it only that? Today we have a big problem, but if you view it, it's also an opportunity. It's a strange term, a strange group of people that are called millennials. You may have interacted with them in your life. There was a survey which said that 80% more of the millennials actually expect their brands to have a conscience. They expect their brands to do social good. So your customers today ask for social responsibility, which is true to your authentic self, not a PR stunt. At the same time, investors and analysts now are actually demanding of companies to actually be responsible. If the fintechs want good valuations, and we all love valuations, well, you are required to actually do good. The question is it just that simple? Are there complexities to be discussed here? Is the reporting requirement too much? Can new startups actually implement these? And how do we drive this agenda forward across the industry and across regulators? So I've got a fantastic panel that I'd like to call up on stage. Can I have Kashifu Inava Abdullahi, Director General, National Information Technology Development Agency. Pleasure, sir. Thank you so much. Please have a seat. Nizamuddin OBE, Chief Strategy Officer, Algebra. Do we have him around here? Is he still? He's on the way. He's on the way. It's a bad traffic situation. Dr. Cedric Janot, please. CEO B Mobile Africa, please have a seat. I'll try and sit here so you can just please there. Alexander Hizigas, please. CEO ECUB. Last but not the least, CEO Abimina, Jeff Stone, please. Join me. You want to come here, Jeff? All right, guys. First one to you, Jeff. ESG, the difference, as I said, is that in corporate social responsibility, it was more about what the companies were doing. No one was asking them to fulfill certain reporting requirements. But with ESG, it's become slightly different. Now, in the more developed economies, you see more regulation coming in. How does an early stage or a mid-sized company put up with the reporting requirements of ESG? Does it actually dilute the value of the objective, or is it actually something that's conducive? Yeah.
Hello? Okay.
Just got to keep it a little...
Something we hear as entrepreneurs over and over again in general, as when you're involved in early stage projects, is that you need to focus on doing one thing correct before you can bridge out into more. And you can't do anything if you can't get the first stage right. And I think this is applicable in ESG. And when you had given me the topics just a few days ago, I had some nice notes prepared, but over the last 48 hours, a very relevant...
You've got to keep it close to you.
A very relevant situation has unfolded for our company, and I think it's best to explain that because it's a real-world example. So we've had a lot of traction in Pakistan, which is the third largest unbanked population remaining. We empower our users by providing earned wage access, allowing them to make use instantly of the funds that they've earned. It allows them to avoid predatory lending and do things as simple as paying their bills on time. So we've had a lot of traction there, and we're very lucky that we have a deep institutional support. One of these institutions is the early stage vehicle of Mark Zuckerberg, Bill Gates, Jeff Bezos. It's called Village. And independently, one of these shareholders reached out to us separately with a term sheet, and they attached some very, very stringent ESG requirements to it. A sizable term sheet, an 8-figure term sheet. So our CEO and founder had been negotiating this term sheet and seeing if they'd come off of some of these stringent reporting and metrics and overall dictation of how we would enter some more markets. And I have a lot of respect for our CEO. He pushed back and said that this would be a distraction from what we think is our core values. The traction that we're gaining now in Pakistan could potentially be derailed if we took this.
Yeah.
So they had come back and relaxed them, but over the weekend they came back and said, listen, we're going to continue to push on these points. And we had to refuse the term sheet because we feel that that would derail our mission of what we're trying to achieve.
Sure.
It could potentially distract us, and we felt if we couldn't be effective if we're bankrupt, we can't achieve our initial goal. So I think sometimes these things can be too stringent and you need to push back, and there's a temptation to try to do too much as an early stage company, and that can prove detrimental.
Thanks, Nizam, for joining us. I think I'll just go quickly to Kashifu here. As a body that looks at developing and driving the digital agenda in Nigeria, how do you actually balance the need to do social good, control your carbon footprint, having good governance? Because the ESG landscape is really, really vast. How do you actually drive a balance between knowing what to focus on without impeding innovation? How do you approach this?
Thank you very much. 2021 was a record year for tech startup in Nigeria. More than 35% of all direct investment to Africa came to Nigeria.
Yeah.
And that was not by coincidence, it was by designing. In 2019, the president resignated our ministry and expanded its mandate to cover digital economy. And our minister, the Honorable Minister of Communications and Digital Economy, Professor Isale Ibrahim Pantami, formulated the National Digital Economy Policy and Strategy for a Digital Nigeria. So that set the stage for the ecosystem in Nigeria. Yes, the startups, they are doing fantastically well in the area of the ESG, but also the government need to level the playing field for them to thrive. So the policy is a foundational policy about digital economy in Nigeria. And when you talk about digital economy, you need three key thrusts to drive it. That the digital identity, the payment system, and connectivity. So we have other policies to promote this. Yeah. We have the Nigerian broadband plan. We have the digital identity policy. And also we have the National Financial Inclusion Policy, which drives the financial inclusion in the country. So also the policy has 8 major pillars. One of it is developmental regulation. So what the minister did is to reset our mindset about regulation. So regulation is not just to put hurdles for the startups, but we call it a developmental regulation. That means we co-create it with the ecosystem. It's not that the government will sit in the office, use armchair theory to come up with regulation. No. We work with the ecosystem. We develop sandboxes for policies that will give them the opportunity to develop use cases. Yeah. Then looking at those use cases, then we can come up with a regulation. Because for us, regulation is to safeguard the providers as well as consumers. So without the enabling environment, the ESG alone cannot help them. Because ESG, sometimes we see it as self-centric. Because as a provider, when you come up with any self-regulation or ESG, you do it in a way that will enable you to excel. While the government look at technology beyond being just a capitalist or a consumer, whereby capitalists look at the technology. How can I exploit it, build products around it? Or how can I create value and capture value from it? While as a consumer, we look at it from where can I buy one and how much does it cost? Yeah. But for government, we look at it, how does it change the way we live and the way we work? And also, how can we use it for public good? So that's where the foundation for ESG comes. So in Nigeria, to build on that, we have so many policies. The ministry came up with about 19 policies to help drive the digital economy. And when you talk about digital economy, payment is centric to it, because any service you consume, you need to pay for it. And part of it, we also work with the Central Bank of Nigeria, which is the first central bank in Africa to come up with the digital currency, and among the first in the world. And when it came up with it, the e-Naira, it also worked with the ecosystem, with the ministry, with NIDA, to develop the ecosystem. Because we look at it, how can we innovate around the e-Naira so that we can address the financial inclusion challenge? We can also make the financial services cheaper. And beyond just payment, how can you use it for to have a lending services, to have insurance and other financial services beyond payment? So this is what is creating the governance layer.
Please, go ahead.
Okay. The government is trying to create the governance layers in terms of the policies and laws. And just a few weeks ago, the National Assembly has passed the startup bill, which is going to be signed by President to become a law very soon. So that is robust and flexible for startups to navigate their ways.
You know, guys, you really need to look at what's happening in Nigeria, because a lot of governments speak and they're talking the talk. But just over the last few years, 3 of the fintech unicorns have come from Nigeria. The financial inclusion that has spurred. So I'd really encourage you, one of the opportunities we have by being at GITEX, other than discovering Dubai, is to network with people. So very inspiring story. Moving from Nigeria to the UK, Nizam, you call yourself the home of ethical finance. So it's an ecosystem where you say that customers, users can donate where they want to ethically, invest ethically. Come on, Nizam, what does that mean? What does that really, really mean?
Good afternoon, everyone. Firstly, a pleasure to be at GITEX. Thank you for easing me in. I appreciate that. By way of introduction, Algebra is a ethical, sustainable, and values-focused fintech in the UK. What does that mean? We basically want to make it easier for consumers to connect their values to their finances. That's like the big piece. What does that actually mean? Which is, I think, the question that you're asking. And I think a really important piece of research that we did as a company last year with MasterCard, we did a piece of research which looked at lifestyle and values-based banking. And what we saw was actually there's a generation of consumers coming through right now globally, not just in the UK. And I think we're seeing the enabling environment in Nigeria. I think we're seeing it all over the world. We're seeing it here. I think what you're seeing is an expectation that is no longer a nice to have, it's mandatory. People don't expect their financial institutions not to care about issues that are affecting us day to day, in terms of our climate change, in terms of inequality, in terms of many other issues socially. And so I think what we practically have done so far, if I may, is practically we have responded to what the consumers want. We have the advantage, and this is what I love about fintech, we have the advantage of being a second and third mover. We have an incredible tech team that have taken all the precedent sets. The UK, we're very blessed, has an incredible enabling environment regulatory. We have a fantastic fintech ancillary industry. We are thankful to our predecessors who have enabled a service industry that has made it easier for us to build tech. So practically right now, when you bank in the UK and you have a digital bank specifically, one of the things that we don't really think about is when you put your money and you deposit it, where does that money go? Where does that money actually go? So one of the things that we commit to our consumers from a custody, whether you borrow, in terms of like your money, it won't be exposed, borrowed, lent to any industry that is unethical. That can't be said of a lot of existing players. Because the reason why we were able to do that is we've built our own proprietary technology that allows us to have a level of sovereignty over where our money can be custodied. And the fact that we have a full EMI license in the UK also enables that. So practically speaking, it means we can say to our consumers, look, it's really nice to say we are ESG friendly, but practically one of the things that we do right now through a really comprehensive values and ethics policy is to say we will not only not expose your money to do anything that does harm, but actively as a company invest, engage in issues which are doing good. So we have a community-first approach for the last 2 years. We have built up some incredible partnerships on the ground. That again allows us to have an offline-online connectivity, which is very rare for a digital banking solution. And then in terms of the app itself, what can you do with it? We are one of the only applications right now where you can track your carbon footprint and in the same user journey offset it. Who you can offset it with is heavily curated. So again, when we think about ESG, at the moment the conversation is very siloed. It's an E or an S or a G. We fundamentally especially focus on the E and the S and how the two connect to each other. So socially, look, if I think about one case study globally right now, we saw the floods in Pakistan. Now, if I look at that country as a case study, you have contribute less than 1% of global climate change emissions and yet are the 5th most affected country in the world. They have a huge unbanked population also. These things are not disconnected. They can be connected. And what we are trying to do, and again, there's a diaspora community where we have an ability to try and remit very easily through the Algebra platform. And so in the UK, where we have started off, what you can do is donate easily. You can track your carbon. You can offset your carbon footprint with projects that are very, very relevant to the issues. We are at the back end and I think that's what the real power is. On the back end, we are curating heavily with a lot of intention how we connect the E and the S. One, you can donate easily. And then as we globally scale, know well that we are regulated heavily in the UK, and we're on the journey to be a B Corp, for example, which again means we are no longer focused purely on shareholder primacy, but rather stakeholder management. These are all the things that I think a discerning consumer, which I believe a lot of consumers are now, especially the younger demographic, are looking at. They no longer want greenwashing. They no longer want just a lovely piece of advertising. They are looking at what are you doing, who are you doing it. Stop there, I can go on for a while.
So you mentioned Pakistan. So I represent Pakistan's largest digital bank. We have 40 million registered wallets, and we move about 6% of Pakistan's GDP. One of the things we've realized on the ESG journey, and it probably applies across boundaries, is to be authentic. Don't try and sell too much. Don't try and give commitments that you cannot live up to as a responsible institution. I think that's what our customers are now asking. Speaking of that though, when we speak about fintechs, most common that is given is payments. And fintechs have a huge role to take people out of poverty. Dr. Cedric, your organization has a very bold statement to help 100 million people in sub-Saharan Africa to come out of poverty. How do you approach this social endeavor? Is payments enough? What kind of other ecosystem plays do we need?
Yeah, so I'm Cedric. I'm one of the co-founder of B-Mobile Africa. I myself grew up on the continent, so this was a personal mission to really launch the digital bank and crack that financial inclusion kind of stuff. So when we looked at it, we said, okay, clearly there's a lot of low-income people. There's a lot of opportunities, but they don't have the tools. You know, based on where you are on the continent, you have sophisticated economy, emerging economy, infrastructure, challenges. But if you look across, can we have a banking solution that will be adaptable to everybody? And if we can we measure the fact that that banking solution can actually have a potential positive effect and measure it in terms of financial inclusion? So it's not just we do marketing and say financial inclusion. Actually, we don't do any marketing. We only have a single marketing person, and we've been in business for 2 years. We actually do stuff, and we measure, and that becomes the financial inclusion. So some of the challenges where in Africa is identity. A lot of countries, of course, have ID cards, But there's many places where the baby is born in the village and nobody bothered registering the baby, and you're not going to get an ID card. So that person is no longer in the system and will not be in the system. So you have to crack the identity challenge. Then when we looked at our population, we say, what really can we do that really moves the needles? What do you think we should do? Is it credit? Is it savings?
Yeah.
Is it payment? Overall majority is actually payment. Because Africa as a continent remains the number one place where we pay the highest fee for moving money. And when you hear all these kind of world remit and Western Union and all that things, this is mainly to move money outside of Africa into Africa, the remittance. Diaspora sending money home. But 90% of the volume is actually intra-Africa. Can you name me one company that does intra-Africa payment? You won't, there's none. So 90% of the volume, which is the most important, is not covered because the majority of Africans work in another African country. You want to send money from Malawi to Benin, good luck. I mean, it's going to be 10, 12%. So it's extremely, extremely expensive. So when we looked at it, we said we have to crack the payment. There's no other way around it. Now, 54 countries, 41 currency, good luck. It took a while. And we actually solved it using the blockchain. But the concept was to say, if we can crack the payment, we will have a foundation that then we can build additional services on top of it to really unlock that kind of like movement of money, and then savings, and then lending, and then all the other things. Took us about a year and a half. We cracked it using cryptocurrency and blockchain, stable coins specifically. And now we operate a payment network where we can move money into 22 African currencies in 30 markets in real time and for free. And because we think it's so powerful when it comes to financial inclusion, we even opened it so anybody can plug into that network. And we as a digital bank makes money on savings and other things. But that's why payment is so important, because once you crack that and you remove the excessive fee, then you can really focus on the value-added services. So that's how we see, and obviously now with Africa, the continental trade agreements, all the other stuff coming, it's a great thing. But the amount of money that we can save, which is in the 10, 12% on average, goes directly in the pocket of the people because we don't take a cut. We give this back, and we said we as a challenger bank need to have value-added services that crack it. I agree that Nigeria, for example, has been very, very proactive. And Nigeria, it's important for you guys to be proactive because you're the biggest country. And what Nigeria does affects the rest of the continent, right? Because the flow of money is significant. And there's a lot of countries that are now also following and saying, yes, we need to enable digital innovation. We need to do that for our own people. So it takes a while, but once again, we've done it. And we've never raised the dollar. We've been profitable from the first year. So you can actually make money and do good. You don't have to choose between one or the other.
Fantastic. Someone said that technology has never been the problem. It's what you do with technology. Kodak had one of the first rights to the digital camera. What did they do with it? So if you really want to take people out of poverty, and if you really want to do social good, then of course payments is an imperative use case. But you also need to allow people to save money. People have a habit to save money in developing economies. Alex, my friend, that's something you work in, communal savings, where 5 or 6 people can get together, start pooling money and saving. How do you see that as the driver of good business, but also spurring forward the ESG agenda? Yeah.
Okay, good afternoon. And
Let's speak a little louder.
good afternoon.
Yeah.
My name is Alexander Hizikis, and I'm the co-founder and CEO of Eco Financial Technologies. And we're a fintech company based out of Addis Ababa, Ethiopia. And like Sardar mentioned, we are working currently on digital peer-to-peer medium platform that's focused on savings groups and lending circles. I'm sure a lot of Africans over here, at least Nigerian people, know that Isusu is very familiar. And this is one of the long-lived financial institutions that exist in Africa. And we plan on digitizing that and legitimizing this powerful financial institution in order to bring about financial inclusion. So when it comes to ESG goals, I think at the core of what we do, there is an economic element to it as well as a societal element to this. So when we're talking about economic impact of what we do, we're mainly focused on servicing the marginalized group of people that are not able to receive credit from formal financial mediums like banks or insurances. So we plan on servicing those groups by having to onboard them and actually bring them into technology. So having that said about the economic impact, the societal impact is by default innately built into this system. With regards to having to be diverse and inclusive, we created different language options that enable different groups that speak different languages to come onto the platform and use our application. So it's very wide, and at the core of it, it's driven by these ESG goals. So as a startup company representing a big population size of 150 million people, we plan on onboarding all these communities that have been left by the banking sector and the insurance sector towards this platform. So I think ESG goals are by default there at the core foundation for ICO.
No, yeah. Can you hear me now? One thing we definitely didn't do right is have gender diversity on this panel, right? So, but clearly opportunities for us to get better. Jeff, coming back to you. How would you suggest a fintech approaches this? And why are we speaking about fintechs in the context of ESG? 10 years ago, no one liked fintechs. It was the cornerstone, it was a corner somewhere in the tech sector. Now most of the tech investments are coming in this space. Valuations are great, but you also want to do sustainable business that's good for the environment, good for society, good for the ecosystem, and you can actually take on. How would you, or what would you suggest to fintechs around the world and how to approach the ESG journey? And I'm going to come to everyone for this question.
Let me see if this works. Okay.
Yeah.
Now it's interesting that we touched upon payments because I think that that's so important to the space. And this might not be the most popular approach, but I think in the payment space, I think consumers, given the trust that comes into handling people's money, that they might not want to see such an active politically sometimes, or they just want their money to arrive where it is as cheaply as possible. And I think that in some cases is how you best serve your user base. And then you facilitate the transfer of money and then it can be used, or with a responsible focus on top of that from an investment standpoint. But I think it goes down a bit of a dangerous road when you ask too much of a fintech company, especially when people's money is at stake, to delve into some of the political or social good. They just want it to work. So that might be a little bit of an unpopular statement for the specific panel, but I think that having a strong company then later lets you delve into some of these social issues that are important to you, but the functionality has to be there. And that's something that was driven forward during the pandemic when the amount of money and the flow of money became so important because people weren't allowed to interact.
Cool. Nizam? Not every organization will have the kind of express statements that your organization, Algebra, does. What would you suggest that fintechs need to be mindful of when embedding ESG into their strategy, and how to take it forward?
So look, to do good, ultimately in the long term, you need a commercially viable vehicle.
Yeah.
And therefore, I think fintechs have a responsibility in the same way Algebra does, is we don't want to constantly be talking about ESG. ESG is something that we want to live in a post-ESG world where you don't have to talk about it, it becomes your norm. And if you look at our literature and the work that we do, we very much don't say we are just ESG. It's just something that we're doing, baked into our DNA as a company. I do think what technology has enabled, along with a COVID environment, is people's expectations rightly have shifted. And as I was saying, I think what's really remarkable now is if we look at the history of banking, you have a lowest common denominator, i.e. low-hanging fruit, which is the mass consumer.
Yep.
And then what you have not been able to do is serve the needs of, say, minorities or underrepresented, whether that's lifestyle, whether that's faith, whether that's conscious consumerism. And I think what technology has done is enable those groups to be served, reduce the costs, and is now normalizing that behavior. And I think what it's now going to do is shift and disrupt the banking world, period, which is already doing. And I think what we're going to see in the future is a much more of a hybrid model. And the two basically historically have seemed to be competing. And I think what we're going to see is far more collaboration over the next decade, especially in the macro environment, which is very difficult. And so I think fintechs generally shouldn't and can't sit on their high horse too much, because they also are trying to build into larger vehicles. And therefore, to be collaborative means for us to be a bit more open in the way we engage with the rest of the sector.
Dr. Cedric, embedding ESG in everything you do.
Yeah, it's exactly. We follow the same approach. We don't really talk about it. We just built it in as part of the value of the company. It's embedded in what we do. It's part of the framework because we are a mission-driven organization, and that's it. Now, looking back for the past 2 years, turns out it's actually good business as well. It helps you with recruiting, having very clear value. You know, when you're a mission-driven organization, does help. But I do think we need to talk about it because we're not there yet on the ESG framework globally. But most people who actually do care about it probably will do it without even telling you. Yeah. And then when you get to the next stage, then people can see it. Oh, okay, you're already doing it. You're already measuring it, so that's good.
Sir, one suggestion you'd like to give to the government sector across to how to drive digital inclusion, because we all know that having access to digital services empowers nations. What suggestion would you give from the Nigerian example to others?
Okay, thank you. Can you hear me?
It's just good. Yeah.
Okay, fintech reached turning point last year. Out of 10 top exits in the tech, 4 were from fintech. Coinbase, Nubank, Robin Hood, and 197%. And also, of 200 fintech that have reached unicorn status, 138 reached that status last year. What are the factors? I think for me, 4 things drive that. Firstly, the cryptocurrency. Okay. Secondly, dynamic regulation. Thirdly, fintech helps reduce financial transaction cost. And fourthly, the COVID-19 economic impact. So these 4 things drive that. But still, when you look at it globally, more than 50% of the world population doesn't have access to financial services. So what are the challenges? If you look at most of the fintech, mostly they develop their solutions around the society they live. We have people that they are still unconnected. How can we get them connected? We have people that cannot afford the conventional financial services. How can we crash down the cost of savings? How can we get the insurance to everybody? So what the government needs to do, for me, if we can look at the SDG goals, it can really help us. We have seen it in Kenya. The fintech has helped move more than 1 million people out of poverty between 2017 to 2019. And we have seen it in Nigeria, where fintech has helped farmers access money from the government. And also globally after the COVID-19, a lot of people were not able to access the relief funds. And when you deliver it using cash, it costs much. Like we just heard about Pakistan issue, where people need intervention, but they are not bankable. So you have to use cash to reach them. So government needs to work with other like United Nations, World Banks, and other donors to see how we can help build the infrastructures for the fintech to reach the unreachable, to connect the unconnected, and get the unbanked to be bankable.
Fantastic.
Thank you.
Alex, last words to you. Suggestions for fintechs on how to drive the ESG journey and the impact they can create. I've been reminded that I'm out of time, so.
Okay. I agree with Jeff, with what Jeff said earlier. Sometimes these ESG goals become very capital intensive for early stage companies in general. So we have to be very cautious when addressing these pressures. I personally understand, coming from an early stage company that's trying to actually build an inclusive platform, that of course, at the core of what we do, we're interested, and it's in our best interest to actually implement these ESG goals. But once informed by regulators, it becomes a necessity. And with investors, if it's something that they look at, then it becomes very difficult when it's being enforced in general. So I would say it's very strategic for all stakeholders to engage in ESG goals, but in a very realistic way. Yeah.
Fantastic, guys. My 3-point summary for this session would be, for fintechs to choose their battles on the ESG journey, you can't do it all alone. You can't do everything. You need to partner and you need to choose. The second would be, as the panelists have said, embed it into what you do. If you're always adding ESG on top, and it's not a part and parcel of your organization's culture, you will not be able to drive impact. And the third thing is, like in our personal lives, we don't like transactional relationships. We like organizations that drive ecosystem impact. If it's just buying and selling, you will not have a brand that will last. With that, thank you very much to my panelists. It's been a pleasure. Thanks a lot.
Thank you very much to the panelists. Such an important subject to convey, so thank you for everything that you're doing. And above all, also thank you to all of you in the audience. I do hope you have a lot of energy. We're just going to take a photo, and then we're going to transition to the next panel. Thank you. Thank you so much, gentlemen. Thank you. So with that, we've talked about the regulatory aspect, we've talked about ESGs, also this component of ecosystems. We're now going to look at the future of fintech in the MENA region, featuring the central banks of Egypt and UAE. And to moderate this panel, I'd like to give a warm welcome to Mohammed Salama, who is Senior Partner, Creative Solutions at Unity Technology, where he leads the company's business growth in the MEA market. So, Mohammed, the stage is yours. Welcome.
Thank you very much. Thank you. Good afternoon. So it was a very interesting talk, and actually I learned a lot when it comes to Africa. And let's continue the same discussion. So we have a lot of African friends as well. I would like to introduce Dr. Rasha Najm, please. Doctor. So Dr. Rasha is heading the innovation and the fintech on the Egyptian Central Bank. We're still on the Africa region. I think we are lucky that we have women in tech or women in fintech in a way or another. So the rest